Hello, members. So, in this weekly psychology video, we'll focus on an important trading psychology concept. It is called thinking in probabilities, not in certainty. Now, just I write on my blog dummisstechanalysis.com. I even create YouTube videos. So the common theme which I see amongst people is they want certainty. What is certainty? What will be the direction of the market? Will it go up? Will it go down? As a trader, the most important arsenal, the most important strength we can have in our arsenal is thinking in probabilities. Now, thinking in probabilities is not an easy task because from the day you're born, like if you want to, eat food, you will eat at a particular time. If you want to go out, you will have a proper planning before that. If you are a, business owner, which client will have what and what needs to be delivered. Everything is certain in nature. If you're doing a job, you know what is your task before you even start. So there is a lot of certainty involved. When something is having certainties, the outcomes are also finite. So if you're doing a job, your salary will be fixed. If you are doing a contract with with a client as a businessman, the amount will be fixed. But when it comes to stock market, you can make a lot of money, you can lose a lot of money, in matter of days, months, and years. So, because there is total uncertain environment, what will happen if Trump raises tariff more? What will happen if there is a war continue between Russia and Ukraine? So all these things, where yeah, I mean, the outcome is uncertain. That is where the risk to reward or the reward is also infinite. So as a trader, the way, I mean, if you are, if you start thinking in certainties, you become with a rigid mindset. Once there is a rigid mindset, what will happen? You will never be able to think on the other side of the trade. A lot of times, if you see and observe your trading pattern, if you have like gold is going up from last 10 days, if someone has shorted on the second day, thinking that it has already risen, you know, either he has to exit his position or he has to pay the MTM. Right. So we cannot think like when anything can happen, the gold can go up for next 20 days also. It can come down for the next 5 days. So we need to always think about risk to reward ratio and think in probabilities. What will happen if the trade goes against us? And that is where one good thing which SEBI has done is it is giving benefit, margin benefit for the FNO traders who are using hedge as an instrument, which helps them to think in probabilities. Okay, if the trade goes against me, at least the hedge will help me to make some profit. So this is the ultimate edge in trading. Our brains create predictability, but the market is a system of probabilities. The path of probabilities lies not in futile pursuit of certainties, but in radical shift in probabilistic mindset, thinking plan A, plan B, plan C. If you are if you know anyone from the military, they will always have plan A, plan B, plan C. Like in Operation Sindoor, if you look at the media briefings of the, Air Marshal, he will think, okay, if this plan was not there, we would have gone with plan B. We have plan C, plan D. Everything should be we don't know when when you are in war. Trading is a war. Like you go in a jungle, there's a probability that you can see a tiger if you don't see a tiger, right? So once you start thinking probabilities, the mind opens to a different horizons. You think like, okay, this can go up, okay, this will happen. If this doesn't happen, what will I do, right? So the dangerous consequences. So what will happen if you are certainty? So first is overconfidence. You think the market will go up, and if leads to over leveraging and poor risk management. This is the most important reason why most of the FNO traders lose money. First is over leverage. Second is poor risk management because you never think about plan B. You always think, okay, trade will go in my favor. Neglect stop losses. You will never think about stop loss because you know the market is going to up. Why? What is the need of putting stop losses? Because it's a sure thing. Emotional whipsell. The pain of loss is amplified when expectations are shattered. When you have big expectations from the market that this will happen, the company you invest in that this will happen, that is where the thing starts going against you. And cherry picking, you start doing cherry picking. You only seek data that supports your fixed belief. Okay, if I have bought 40,000 crores of option, I am long in the market. Definitely, they will be, the market will go up, right? Cherry picking, you always look at the data. What will support your analysis, your belief. But a professional trader, institutions, they're always probably if FIs have bought 40,000 crores of stock options, it doesn't mean that I mean they will have a hedge. They will also hedge their position. So they always think in certain probabilities. They don't think in certainties. You don't know for sure if the trade will work or not. You only know with a degree of confidence that your strategy gives you a favorable edge over a large number of trades. This is a very important thing. Large number of trades. At the end of the day, trading is a game of doing large number of trades. If you do small trades, thinking that this will only make me money, that will never happen. Eventually, like it's just like every trade is like a flip of a coin. It can come heads and it is having a statistical edge. Heads comes you win, tails come you lose. You have to accept it. That is where think like an institution, think like professional traders who always think in probability. Trading is not like I trade for today and I'm done for the whole of my life. You have to trade large number of trades, and for large number of trades, you have always have to survive. Capital market means if there is capital, there is a market. If there is a capital, you are, I mean, as a trader, investors, if you invest everything in one stock, thinking that this would happen, that will never work out. So three pillars of probably how to develop a probabilistic mindset. It's not a philosophy, it's a fundamental change you need to perceive, bring in your mindset, in your brain, and your role with it. First, in accepting randomness. Trading is totally random, acknowledging that anything can happen at any given point of time. A loss is not a failure, it's an expected outcome, right? Within large sample size. Embracing your edge. You need to have an edge. You need to have a strategy which gives you a positive edge over a large number of trades, right? So, like we focus on GAN and Astro. They are not the only one. You can even go with price action. You can go with whatever you feel like. And focusing on the process. Don't look at the outcome. A lot of people who talk to me, if I learn this, I'll make a lot of money. That will never happen. You will have to focus on the process. The process will take its own sweet time, but eventually, over a period of time, consistently, you will start making money. So how to embrace probabilities? So this is so first trade, like this is a graph which we have created of probabilistic mindset. So I can win in first trade, I lose. This is like 1:3 risk to reward ratio, 1:1. See, losses are always bound to 1:1, but rewards are 2.5, 3.5, and all that. This chart shows the series of positive expectancy, even with more losses than win. So if you can see here, 1, 2, 3, 4, 5, 6 trades were sorry, 5 trades were in profit and 1, 2, 3, 4, 5, 1:1, almost like 50% risk to reward ratio. But if your risk reward is 3 times and your risk is always the loss is always limited to a one time, eventually you end up making more money. This is the maths of probability. So now coming to the next part, shift in your language, change your internal and external language. I know the market will reverse from here. I believe there is a probability of reversal. Thinking, saying to yourself, there is a probability of reversal is high here. This separates your identity from outcome. Quantify your rate. Backtest your setups, backtest over a large number of sample size. The more you backtest, the more you get feel of the market. So we generally believe on GAN and astrology concept. So we use Astro tool for timing and GAN tool for measurement for price levels. And this is where the power of confluence come in. And this helps us in bringing probabilities to our trade and high conviction setups we look for. So, with this video, I'll share this presentation also. With this video, our focus is making sure that you start thinking in probabilities, not in certainties. If you do that, eventually you will become a better trader. If you are not able to do it, then things will definitely not work in your favor over a longer period of time. So thank you very much for watching. I wish you guys all the best. Stay disciplined.